Hey traders, welcome back to my channel. This week has been brutal. I've given back most of my profits for February and honestly, I let my emotions get the better of me this week. I made some classic trading errors this week, revenge trading, overtrading, and ignoring market structure. And today I'm breaking it all down for you, what went wrong, how I'm fixing it, and the biggest lesson that I've learned trading multiple funded trading accounts. If you've ever struggled with the emotional side of trading, trust me, you are not alone. So let's talk about it. A quick reminder that all the software that I'll be using is linked in the description below. Please remember to like and subscribe to the channel, and let's get straight into the content. So this week I ended up red on my account, and the worst part is it wasn't even the market's fault, it was my fault. After my first loss of the week, I instantly just stepped into revenge trading, taking random trades simply to make back my losers. They were poor quality, unnecessary trades, and we know how that all ends. More losers. Now I've been trading for over 5 years. I have gone through the process of pretty much every emotion you can experience when you are trading, and I thought that I had it under control. But this week has shown me that trading psychology isn't something that you just master once. It is a constant battle. It is a performance. The real question is, why did it happen? Trading is a performance game. Just like an athlete, if you are not in your peak mental condition, then your performance suffers. And just lately, I have felt pretty overloaded. Well, I am trading 3 different trading accounts, all using different strategies and different risk tolerances. I am managing funded trading accounts whilst raising 2 children, 2 preschoolers, full time. And I got greedy. I wanted more. I wanted to make more money, and I wanted to make it now. The result? My focus was spread too thin and my emotions took over. So I've had to make a tough call. I am stepping away from my high stakes account for now, and I am focusing on my instant funded account where I have proven that I can already be profitable. Speaking of my instant funded account, one of the main reasons that I joined the 5%ers prop firm is because of their incredible growth plan, which with the hyper growth funded account means that you have the potential to scale up that account size all the way to $4 million, which means that you really can focus on taking the highest quality trades, knowing that that hard work will pay off. And that's why I am shifting my focus back to what has already worked for me. And instead of chasing for more profits, I'm going to scale smartly. If you want to learn more about the instant funding program and how it works, check out the link below. Okay, so now for this part of the video, I'm going to break down the mistakes that I made trading pound dollar this week on the charts here on TradingView. Hopefully this will be really valuable for you guys to see what kind of simple mistakes can be made when you're trading and help you to avoid making them for yourselves. So firstly, mistake number 1 was indeed ignoring market structure. And this is super simple. I can't even believe I made the mistake. I must have gotten into such a clouded state of not recognizing what was right in front of me. And this is what I'm talking about. So right here we are on the 15-minute time frame for pound dollar. Now you may notice this big red range. This is what I did towards the end of the week as a warning. I banned myself from the charts until we got a clear break of this range. So I'm going to just remove these drawing tools for now and show you exactly what happened this week. So this is down to personal preference on what time frame you prefer to use. You might get more clarity from the daily. I'm going to stay on the 15-minute just to make it a little bit easier to follow. But if I zoom out here all the way, you can see that quite clearly price has been coming up. Anyone looking at this chart can see that it is going up. Price is going up. I'm saying that over and over again because what did I do? Mostly this week I tried to short it. And that was pretty much one of the biggest mistakes that I made this week, was not taking into account the importance of market structure, simple market structure, and what is right in front of me. So zooming in here to Monday, and at the start of the week, if we look back on the Friday, we got this sort of pullback here Friday, and price is pushing up in this pattern. We made a high. You might be able to hear my dog. As we opened up on the Sunday, coming to Monday morning here, price kind of ranged up like this. I decided to go short in this area here because I just had it in my head that we were getting exhausted, that we're ready for reversal, and that price was going to pull back down to this area to gain some strength for that uptrend. So I was going short. Now, there's not necessarily something wrong with reversal trading, but reversal trading can be very tricky to gauge the timing on because you're essentially going against the trend. You're swimming against the tides. You've got to be very sure that it is the right time when it comes to reversals. And it's quite a precise strategy. And I didn't follow my strategy step by step as per my plan. I got in more on feeling and it just didn't work out. As you can see in the New York session, we just got a push up and price made another slightly higher high here. You think that I would learn from that mistake, but as it happened, Tuesday morning during the Asian session, we sold off. London session, we pushed up. And what did I do? Again, as we pushed up into this area here towards these highs, I went short. So another mistake. I'm against the market structure yet again. I didn't learn from Monday. And the second mistake that I'm making here is that I'm trading during the London session, and that isn't usually what I do. Passing the funded program, I had a very strict trading plan that I adhered to, and that mainly consisted of waiting till the news release in the afternoon here in the UK and trading during the New York session. I didn't do that this week. And what did we do? Come into the New York session here. We got a little tiny push down, but then price pushed back up and we made a new high on the Wednesday morning. So here I was, I have shorted it Monday morning, I shorted it Tuesday morning, Wednesday morning came, what did I do? So I shorted it again. I was absolutely determined that there was going to be this big drop down and I had it in my head, I actually got into this very early on. I had it in my head that we'd had those all important 3 taps, 1, 2, 3, that can signify an exhaustion in a trend. And I was just hoping really that we were going to get this drop down because I was trying to get a really big target. That is what was fueling my trading decisions, was greed, was trying to get a lot of return on my risk. And at this point I needed it because I needed to make back what I had lost. And these are not good reasons to take a trade. These are emotional reasons. And I also suffered confirmation bias. I was only looking for what confirmed what I wanted price to do instead of looking at the bigger picture. And so ironically, this bit of price action right here where price came up in the red, that was a news release. And just before that happened, I decided to set a very tight break-even stop because I was already down on my accounts and I knew that we had, I think it was CPI news release coming out for the pound, 7 o'clock in the morning on this day, on the Wednesday. So I set a break-even profit stop, which the news got released, it pushed up and it triggered my profit stop. But I suffered a little bit of slippage, so it was actually a very small loss as well. But after that, price did drop. I mean, it didn't drop all the way down here, but it would have dropped. So if I had not tampered with that trade and let it work, I could have gained some profit on that, but I didn't gain profit from that trade. And so Wednesday evening, that was when I told myself that that's it. I needed to just stop for the week. I'd suffered consecutive losers and I really needed to just take a step back. Otherwise, it was going to just get much worse. So we just touched on another mistake there that happened during this trade, which was my premature exit. Once you suffer losing streaks like this, you can lose perspective. You can also lose your ability to really think clearly, and it makes you doubt your plan. And these are just a few examples of the downside of a losing streak, how it can affect your decision making and how it can inevitably get you much deeper into the red. And the best thing to do, in my opinion, is to just stop. Overtrading like that can cloud your judgment and it can stop you from seeing what's actually happening. If this sounds familiar to you, drop a comment below. Let me know if you've had a similar week to this. So what's the fix? How do you stop emotional trading? Well, step 1, take a break. If you're caught up in a losing streak, it's so important to get away from the charts. A day or 2 off will help you to reset your mindset and regain your focus. Step 2, and this isn't talked about that often, but I definitely believe this to be really, really important aspect of trading psychology, and that is to be aware of the dopamine hit. We all know that trading is addictive. In fact, it is gambling. Whether you have a plan or not, whether you adhere to risk management or not, you are gambling. What happens during gambling? Well, the brain releases a hormone called dopamine, and dopamine can create feelings of pleasure. That's what makes it so addictive. To avoid the urge to overtrade, it can help you to replace your dopamine hit with other activities, such as exercise, better sleep, or a hobby that challenges you. I've recently taken up playing the piano, and I'm getting pretty addicted to that. Step 3 is to simplify your focus. I am cutting back down to one strategy and one funded trading account. No distractions. Of course, remember, trading is a very personal journey, and I have to fine-tune my trading in this way because I am also a full-time mother. I am looking after my 2 preschoolers Monday to Friday, all hours of the day. My eldest starts school in September, so I'm hoping that will change things up a little bit. But until then, I really need to just keep it so simple when it comes to trading and look for A-quality trades. So that's my week. A tough one, but it came with some super valuable lessons along the way. Trading isn't about never making mistakes. It is about always learning from them. And more importantly, coming back stronger. If you've ever struggled with overtrading or revenge trading, let me know in the comments below. And I'm curious to hear what has been your greatest lesson when it comes to trading psychology. If you've enjoyed this video, do let me know by hitting that like button. Don't forget to subscribe to the channel below. And I'll catch you in my next video. Thanks for watching. Bye.